Holy smokers, everybody! The Federal Reserve has just minutes ago announced a new bailout plan, a new stimulus plan of $750 billion in stimulus. Just like that, it's like they wave a wand and $750 billion whoosh, floods into the marketplaces. It takes Congress months to do this kind of stuff, and if this kind of stuff frustrates you, well, then you already know that you need to go to the links down below and get life insurance and 2 free stocks with Webull when you deposit $100. But let me show you what's going on here and where the money is going, because honestly, this is like A, frustrating, B, shocking, and C, like, oh my gosh, like how can we take advantage of this? Well, let's talk about all of that in this video. So straight up, the people who benefit most from this are people who own stocks and have ownership in companies, whether they're managers at companies or they're CEOs of companies or they invest in bonds of companies. This is unbelievable. And so folks, if you've been watching me every single day talking about stimulus and programs where the government comes in and floods the markets with money, you probably already know that I say this in every video. If you want to get ahead in America, you've got to figure out how can you start, even if it's starting small, owning real estate, a house, companies, bonds, stocks, because this is ridiculous. Let's look at some of the details of what's going on here. First things first though, yesterday night I spent some time chatting in the public Discord in the stocks section, which you can join totally for free in the link down below. And we were talking about the futures market, about how red it is. Like this morning, the market was supposed to basically collapse this morning. It seemed like the circuit breaker was going to go off, you know, when the market drops like 7%. It's supposed to be a nightmare of a day this morning. And when we woke up, we got exactly what we expected. A lot of stocks were down 7 to 10%. There was a broad sell-off in the marketplace. The market was not having a really good day. It was having a bad day. Yeah, then all of a sudden, somebody did something, and all of a sudden, the stock market played like some kind of Uno reverse card, and the market started jumping and recovering not only most of those losses, but then creating gains in areas that had losses previously. Well, now we know it was the Fed, the Federal Reserve, Mr. J. Powell, Jerome Powell with the money printer, who threw the Uno reverse card. The markets were down, and so here you go. Here's your bailout. The Fed throws a card instantly. You need a stimulus check, though. You wait until August, maybe. Welcome to America. It's messed up and it's a broken system. But let me show you exactly what happened. If you look, for example, at the Dow Jones Industrial, which is that big index we always hear referenced, right? The Dow is up 200 points, the Dow's down. The first time the Fed announced that they were going to buy corporate bonds was actually right here on March 23rd, which ended up being the bottom of the market. And the stock market promptly jumped straight up. And that's not a surprise. It's been up from that low. Well, we've now literally had the same exact thing happen, and upon the announcement of the Fed doing this, you see pretty much all of the bond funds that the Fed tends to invest in jumping up right away. And where does that bailout money actually come from? Well, here, the Federal Reserve says that the Federal Reserve is taking $75 billion from the Treasury Department. They're taking money from the CARES Act. $75 billion from the CARES Act, and they are going to leverage that 10 to 1. So that way they have up to $750 billion to buy corporate bonds. Except previously on March 23rd, they said they were going to buy corporate ETFs or index funds, like groups, like those iShares in that picture that I showed you right here, where they buy a sort of an index fund of bonds. And that was cool, but now the Fed is going to go as far as saying they're going to buy eligible individual corporate bonds. So that means if like Apple issues bonds, the Fed might actually come in and just straight up buy them. But it's not just Apple. See, the Fed actually says they're going to buy bonds from any company that has at least a BBB minus or a Baa3 rating as of March 22nd. Those are the definitions of basically being on the border of a junk bond. In fact, this is what a rating looks like. The best, highest grade bonds are AAA rated bonds. We've probably heard that before from the great financial crisis. And the Fed is saying, hey, we'll buy anything as long as it's above this line right here. Oh, but don't worry, we have an exception. If you happen to fall down to this level right here, which means you're not investment grade, you're basically junk. This is a junk bond down here. The Fed says, hey, you know what? If you happen to fall to this because of the pandemic, no worries. We'll pretend you're still good. and they'll buy those bonds as well, which is just absolutely mind-blowing. And you can see that right here where they say that. Absolutely shocking. But what kind of companies are actually in these, portfolios? Like, which stocks might directly benefit from these? Well, CNBC put this chart together and found that the last time the Fed did this, they spent, actually, they didn't spend that much. They only spent $326 million on their largest holding, which was this iShares fund here. Then they spent $228 on this Vanguard fund over here and some of these other ones. I wouldn't be surprised if these holdings have substantially increased, because this is maybe around $1 billion. Well, they just authorized buying up to $750 billion. So if you thought the recovery was already like, how could there be any more printed money going into the economy? The Fed's already bought bonds. They've already propped up the markets. Like, how could there be even more money? They only spent like a fraction of what they just authorized on bonds in the last round as of May 18th. And so what are in some of these things? Well, what we can do is we can actually pull up a prospectus here to try to understand what's inside of these bond funds. And so here's an example of the Vanguard bond fund. This is what's inside of it. You've got T-Mobile, Bank of America, CVS Health. You've got Wells Fargo over here, Dell, Anheuser-Busch, Broadcom, Microsoft. These are kind of, there you go, Broadcom, Microsoft. So these are the top about 10 holdings in that Vanguard ETF for the bond fund. And then over here, this is the most popular one they use. And this holds by weight Bank of America, Chase, the Citigroup, Goldman Sachs, get rid of myself here for a second, Apple, Morgan Stanley, Verizon, Comcast, Wells Fargo, AT&T. There you go, folks. A broad swath of basically American stocks, which is really good if you own those companies for the picture. So there you go, basically a broad swath of American companies. And kind of the way that works is if like Apple's like, hey, I got this $10,000 bond that I want to sell. Apple would get $10,000 in cash, and then whoever buys that bond holds that. It's kind of like a loan, and they get paid interest. But in the meantime, it gives Apple, the company that issued the bond, cash. And then that company can use the cash to hire people, to increase wages, to innovate products, to do probably stock buybacks. I mean, let's be real, bump the stock price, like stuff like that happens all the time. It's craziness. But anyway, that's basically what's happening here. And if the Fed is doing that to the tune of $750 billion, you just made American companies a whole lot richer. Because think about it this way, when Carnival Cruise Lines needed money, they had to go to the public bond market, and Carnival Cruise Lines was seen as basically a bankruptcy risk and a junk bond risk. They had to pay like 11% on their corporate bonds, which is really expensive. That means when Carnival wants to raise money, they have to pay 11%. That's like a company using a credit card. I mean, credit cards are worse, but it's kind of like that, right? Well, now the Fed comes in and a company goes, hey, I'm offering 3% on my bond. Anybody want to buy? You look around, nobody's around. And then all of a sudden, Jerome Powell comes into the room. I'll buy it. Because he just buys everything. It says made in America. We'll buy it. You're a junk bond now? Were you a junk bond in the past? No, I just became a junk bond. Good enough for us. We'll buy you. Yeah, welcome to America 2.0. America that rewards people who own stocks and companies and real estate and businesses, even if you've fallen upon very hard times, and forgets people like tenants and individuals who don't own substantial assets. This is actually, in my opinion, terrible news for people who don't own assets, and great news if you are in the stock market. This is a huge market bailout. So what can you do? Number one, get educated. Learn how to start investing. Learn, like, why have you not bought your own house yet to be an owner? Why are you still renting? What can you do to increase your income so that you can become a homeowner? What can you then do to start investing in stocks, investing in retirement accounts so you can be part of this growing wealth? You don't want to pick stocks? Invest in an index fund. Open up a Wealthfront account. Wealthfront. You can open up a Wealthfront and basically you invest in the index fund of index funds. It's so easy. You don't even have to do anything. You just transfer your money in and you're done. Get life insurance because it removes stress from your family. And of course, buy and hold for the long run. But seriously, Professor Jeremy Stiegel, who's a professor at Wharton, he's one of the biggest economic heads you could think of, basically says this huge bailout is going to massively feed the economy over the next few years. So in my opinion, this is really interesting. This is just another example of don't fight the Fed. It's better to buy and then wait than to wait around for, somebody with a flag going, go ahead and buy now, and then buy. That is, if you have money sitting on the sidelines, consider getting into the real estate market. Get a below market value deal so that way you can insulate yourself. I teach you how to do that on this channel and in the links down below. If you haven't gotten into stocks yet, you can warm up with an index fund. Get those 2 free stocks with Webull and kind of feel what it's like. All right, you got 2 stocks. You could sell those and buy whatever you want and just feel it. Start, getting your feet wet in what it's like to actually own assets. Because realistically, it doesn't matter if you buy exactly what the Fed's buying. If they're buying JP Morgan and Bank of America, you don't have to match that. The entire market is going to move up because if those companies move up, other companies tend to move up with it. So this is massive. I mean, this is a huge amount of money that's flooding the market. And I don't blame you at all because, I think about it too. Like, what is this going to mean long run? Is this going to mean hyperinflation? Is this going to mean that at some point taxes are going to have to go up to pay off all this extra debt that the government is creating? The Fed is basically, we're creating a bunch of debt here to keep it simple. But anyway, yeah, there are some massive concerns, but at least for the next few years, golly, it is hard to say sit on the sidelines because every single day you're not in the market, it seems like the Fed just keeps pumping more money in. There you have it. So, get your life insurance. Here's your update. Get your 2 free stocks with Webull. Just make sure you deposit $100. Check out the programs in the links down below so you can talk to me every day the market's open at 9 a.m. Pacific time. And if you have questions, you can't make it at that time, just post them and I'll answer them for you and you come back and listen to them on 2x speed. Really appreciate it. Use that coupon code down below. Consider bundling up as well. And folks, we will see you next time. Thanks for watching.